Hi everyone. Today we're going to be looking at SAICA course paper, the first board exam of SAICA for January 2025. In this question, I will make assumption that everyone has read the question in full, and I will be summarizing and analyzing the information that I believe will be important going forward for the questions in this paper. This question is made up of 120 marks. And all amounts in this question will be excluding VAT unless indicated otherwise. This question have 4 points or have four heading details, which we'll look at, but we will not be looking at it in details. I'll be summarizing the most important points that I believe you need to understand on this question paper. And what I'm covering now, I'm only going to be covering the background information and the details of this paper, which is number 2, 3, and 4, as well as all the information that is included in paper. The solutions will be covered in the next video. So after you've watched this video, it will be important that you then watch the next video, which will have the solution. Without wasting time, let us look at the background. If we look at the background, on 2 January 2023, Marchant Peddler started as a trainee accountant at Hustler and Company, loosely termed Hustler. From 2019, I started a business. So the business was to acquire 3 second-hand vending machine, which we acquired on 1 September 2019 with a total purchase price of 93,000. And those 3 machines were kept or were located in the student accommodation complex. The machine accepts cash as well as cards. And this machine are selling cool drinks, energy drinks, chocolate, chips, and microwavable food such as noodles. The machines operate for 24 hours, meaning to say they're always in operation. So anytime a student wants to buy a cold drinks or chips or noodles, the machine will be operating and the student will be able to get the products that they want to buy. So in terms of how this machine was financed, it was financed entirely with a loan from Marchant's father. So the 93,000 for the purchase of those 3 machines was received from his father. Because we know that Marchant is a trainee, he asked for assistance from John Peddler, who is the father. When obviously it's not available, that means is in the training contract or is working as a trainee. So what John was doing was taking full responsibility for stocking for the machine, tracking sales, maintaining inventory levels in the machines, as well as ensuring that the machines were in working order. We have been provided a detailed income statement of Marchant's current operation. That is for the year ended 29 February 2024. From this information, we can then determine that we are most likely going to be asked information surrounding the 2024 financial year end. And it will be for the year ended 29 February 2024. If we look at the table below, we have revenue. And if we're looking at revenue split into cash and cards, already we understand why, because we have been told that the machine accepts cash as well as card payments. Then in regard to cost of sales, it has been calculating using the cost of sales formula, which is opening stock plus purchase less closing stock. And then there is refunds. One might ask what these refunds relate to, but we have been given a note reference which will assist us to understand what these refunds relate to. Then if we go down, we have expenses. Then now one wonders, what are the expenses in this business? Then the business has the expense which is maintenance of vending machine, depreciation of vending machine, vehicle expense. And for vehicle expense, we have been given three types of expense, which is fuel, maintenance, as well as insurance. Then moreover to that, we have bank charges. And for bank charges, it's broken down into two. It's cash deposits and card fees. And when it's come to both of them, we know that the cash deposits are because some of the sales are in cash. That means they need to go deposit that cash to their account. And then card fees generally are fees that you incur as a result of having a bank account as well as using the bank services. And the other cost that we have is cleaning material, and then we have data cost and rental. For some of the expenses, we have notes reference, which will guide us and assist to understand what are those costs relating to in detail, or what is included that should not be included in this cost, or any other additional information that they believe we need to understand for the purpose of answering question pertaining to this detailed income statement. In terms of the amount, I'm not going to list each amount, but we can all see the amounts that we have here. What is more interesting when you're looking at the amounts is that they are not paying a rental. Then one might wonder, why aren't they paying the rental? Because the assumption is that if you have put this machine or this vending machine and the student accommodation area, you're expected that you're going to pay the fees for keeping your machines in those locations. But it seems that they will not be paying, or they are not paying the rental fees for this machine storages. Just to get a clarity on that, they put a note reference which is 1.9, which I believe will give us a guidance in understanding why there is no rental amount. Then if you look in terms of whether they made a profit or loss, they have made a loss for the year of 12,614. So you must remember that this is an accounting loss. It might happen that even though they made an accounting loss, in terms of SARS, they have made a taxable income. So that is very important to understand that an accounting loss might not be similar to taxable income or taxable loss, because SARS might take into account other items or not take into account other items that have been considered here, either for income or deduction. Then let us look at the note references that we have and understand what those note references are on the table above. So if we look at the first one, which is 1.1, we are told that they're not registered VAT vendor. Therefore, all amounts in the table are inclusive of VAT. And then 1.2 was in line with the revenue, cash. And then they are telling us that this vending machines accept cash or card payments. And what they normally do, they remove cash sales proceed from the machine daily to avoid the theft or losses of cash. And then they leave minimum amounts just to make sure that there is money available for change. And then 1.3 is in line with the opening stock. And then we are told that they buy the stock mainly on wholesale or major retailers. So wholesales are mainly those companies or sales shops which sells mainly to people that are buying for resale. Then we have 1.4. 1.4 is in line with the refunds. You recall that we were wondering what those refunds relate to. Then we are told that refunds relate to goods that did not drop from a chain. So the clients will then say this was an unsuccessful transaction, and then they will be provided a refund either through cash or it will be taken back to their card if they use card. They previously used cards. And then if we look at 1.5, 1.5 is in line with the maintenance of vending machine. And then what we are told here is that there is a regular maintenance for the machine irrespective of the level of sales. Meaning to say they have to renew machine, apologies, they have to repair the machine regardless of the sales level. And then more information we are told with regard to the amount that you have there of 11,754 is that there is 7,500 for a new card reader with a total cost of 7.5 that was installed on the vending machine on 29 February 2024, which was the last day of the year. And then what is important when we're looking at the 7.5 is that it is more than 7,000, which can be claimed in 1 year. So it's not considered a small value asset. Therefore, we cannot claim the full allowance of this new card reader. So that was important with regard to this new card reader. And then we're moving to 1.6. We all recall that 1.6 was in line with depreciation. And we are told here that the depreciation is 10% per annum. And if we're looking at the detailed income statement, we can see that the depreciation for the year was 9,300 and the machine was 93,000, which is more in line with the policy of 10% per annum. Therefore, we can see that there is no error in the depreciation amount that has been included in the detailed income statement. Then we're going to move down. When we move down, we see a data cost. On the data cost of 522 Rand, which is reference 1.8, we are told that all the amount relates to the business. Therefore, it is deductible under section 11 of the general deduction formula. So that's why they are telling us this cost relates to the business. And if we move to 1.9, they are talking about the rental. You recall that when we're looking at the income statement, we're asking ourselves why there is no amount relating to the rental. And then if you're looking here, they're saying they do not have formal contracts and they do not pay any rental payments. Let's take us to the end of point number 1 of the background. We're then going to move to number 2, which is the extract of employment information with Hasley. Remember that Marchant is working as a trainee accountant in Hasley. Now we are going to receive and digest the information with regard to the employment of Marchant. Let's look at the information that have been provided to us and understand everything regarding the employment contract that Marchant has with Hasley. We are told information about the remuneration package for 2024 year of assessment. Number 1, he is paid 21,900 per month. So that is the basic salary that he received at Hasley as a result of employment as a trainee accountant. Moreover to that, we are told that he is a member of a chartered accountant medical aid and he is not disabled. Therefore, there is no section 6B1 available to him. Moreover to that, he's paying a monthly contribution of 2,840. We are told that he's unmarried and does not have the dependent. In addition to that, there were no out-of-pocket medical expenses, meaning to say he's not going to be deducting any additional expense incurred out of pocket. And when you move to number 3, we are told that the company was paying for the cell phone and the details of the cell phone. It's iPhone 13. The market value of the phone is 13,999, and the company, which is Hasley, pays a subscription for voice and data for an amount of 769. Moreover to that, this cell phone private use is incidentally, meaning to say it is used mainly for business purpose, right? Therefore, this means this is a zero value fringe benefit, just for your understanding. And then when we move to number 4, we are told that he was away as a result of engagement and he received an allowance of 190 Rand per day to cover the incidental cost. We all know that SARS does allow a certain amount for the incidental cost. I believe it's 167 Rand, which is the maximum that you can claim if you claim incidental cost. And over to that, you are told that there is no money that is recovered by Hasley from the client regarding to incidental cost. So the information that you are aware of is that he spent 30 days and then 190 was received by him. Then when we move down to point number 5, it's the information regarding the travel allowance. What we're told here is that Marchant received 520 per kilometer traveled, right? That means you can claim 520 for kilometer traveled. And then let us see the details of the car below, as well as the split of the kilometer that he traveled. So he purchased a vehicle, a VW Polo Candy, on 1 January 2023, right? The value of the vehicle was 269,900,000. So it is important to know the value or the market value of the vehicle because it assists us to determine how we go about calculating allowance available to him as a result of using his car for the purpose of the business or the employer. So what happened is that he did not keep accurate data of the expenditure for his travel, meaning to say he's not going to be able to claim expense relating to the expense incurred as a result of using this motor vehicle because there's no accurate data kept for the expenditure that he incurred. Then if you move down, it gives us the split for the distance traveled for the 2024 financial year or year of assessment. There was a total kilometer traveled of 14,000. Of this 14,000, 8,400 relate to business. That means it can be claimed for business purpose, as well as 5,600 related to private. Therefore, it cannot be claimed for the purpose of business. Therefore, further going to move to number 3, which talks about new business opportunity. Marchant was conducted by Jackie Oldman, another vendor involved in vending machine business. So Jackie want to dispose her vending machine business, and then this vending machine business is under the business Oldman Vendi Pty Ltd or OMV. So she owns 100% of the ordinary shares of this company and is not registered as a vet vendor. OMV focus mainly on the hotels, the big corporate office building business, and business that operate 24 hours like your logistic and courier business. OMV has 32 vending machines and operates in 20 sites, which are located in Tshwane and Midrand. OMV has been in business for many years, and some of those machines are more than 10 years. So that gives us the background in terms of OMV, where it operates, and the machines they have, it's how old are they, right? And also which business or focus they are on. If you look here, what is most interesting is that if they purchase or they buy this business, it will allow them to expand their business and also expand their reach where they are located. It looks like a lucrative business for Marchant. Let us see what comes next. Marchant is keen to acquire the business, which is obviously expected, considering that this will allow Marchant to grow his business as he currently owns only 3 vending machines, and this business will come with 32 vending machines. So Jackie offered 2 options in terms of how Marchant is going to make acquisition of this business. So the first option is that he will be purchasing shares for the value of 692,925 in cash. Alternatively, option 2, he will be buying asset also in cash for the same value. And then, moreover, we have been provided the split of asset that is going to be purchasing in cash. The first one is its vending machine. The vending machine, it has a market value of 600, but the value is only 547,975, which is quite interesting why the market value is more than the value that they are going to sell for. So it's look like it's going to be beneficial for Marchant if we go ahead and buy this asset. Then we've been given the inventory, meaning to say this business still has inventory that are sitting in this 32 vending machine, and the value is 42,849. And then there are coins which are also in the machine, I believe, of 11,251. Then there's a panel van, which is 2010 model. We told the open market value is 100,000. However, it will be sold at 90,850. And also, when we're looking at that, we can also see that basically then the cost, the open market value is also greater than the value that we're going to be purchasing this asset for. And in total, when we're looking at the total value of this asset, it's come to 692,925,000. So now, what is important now to understand is to understand that merchants now want to incorporate and establish a new business as a result of acquisition of OMV asset. And they will name this company Vendy Boys. So if we look, what we see now is that Marchant was operating as a sole proprietor. He was approached by OMV, and now because he want to buy this asset in OMV, he then want to incorporate and establish a new business. So the business going forward that we will be talking about, it's Vendy Boys. Let's see then what will happen after. So if you look at transaction 1, the open incorporation of new company called Vendy Boys, as I have said, and then it will be incorporated as of 1 March 2024, and it will be registered as a category B VAT vendor with SARS. So now the OMV is not a VAT vendor. And then when he was operating as a sole proprietor, he was also not a VAT vendor. However, this new business called Vendy Boys is now going to be a VAT vendor. So that what is more important for you to understand now is that we are introducing the business that we're going to establish into being a VAT vendor, meaning that he's going to collect VAT on behalf of SARS and paid over to SARS, right? And also is able to claim any VAT charge by the suppliers that are VAT vendor. Then if you look at number 2 of the transaction 1 information is that on 1 March 2024, you will transfer 3 of the second-hand vehicle that he currently owns in his personal capacity as merchant or under the sole proprietorship. And the reason for transferring those 3 machines to Vendy Boys, it's for the exchange of 100% shareholding. In the tax value of the second-hand vending machine is 23,350, and it also reflects the market value as of that date. Then here, transaction 1, we are told about new incorporation of the business called Vendy Boys, and moreover, we are told that the machines or the vending machine that they currently own, which were purchased on 1 September 2029, will be transferred to this new company, Vendy Boys. And then we are told that the tax value of those machines is 23,250 on the date of transfer, which is 1 March 2024. So those are the most important things that we have to understand, digest, and consume for the purpose of being able to answer the questions going forward. Then we're going to move to transaction 2 and see what is important in transaction 2. Seems like in transaction 2, we are told about which option that he decided to opt for. And the reason that we are told about the option is because we were told that there are 2 options that Jake is offering. The number 1 is either buying the shares, or the number 2 is the asset. And assets was option 2, shares was option 1. Now we are told that he decided to pursue option 2, which is to buy the asset from OMV. Right. So then we are told the financial year end for Vendy Boys will be 30 September 2024, which is this new company that will be or have been established by the company. And moreover, the transaction took place on 2 March 2024, which is just after the business was registered. Then we move to transaction 3. And then if you move to transaction 3, let's see what is important about transaction 3. So we all understand now this purchase has to be funded in cash. So the question is where this money is going to come from. We need to understand 692,925. Where is it going to come from for the purchase of this asset that are from OMV? That is the business that JK is selling. We are told that there will be loan advance of 450 that will be coming from the father. And from this, we can see that father really likes to see Marchant doing well in life because it's going to advance him 450,000 to buy this asset from Jackie. And then there will be loan amount, which for the balance, which will be through increasing his personal loan at the bank. So both the loans will incur interest at prime plus 3.5%. The prime is currently sitting at 11%, then meaning to say the interest rate will be 14.5%. Then again, Marchant decided to involve his brother in terms of running this new establishment called the Vendy Boys. And Marchant and John are the only director of Vendy Boys. And what is important about the business when you move down is that they will be compiling annual financial statements, and we know that a person that has competences for that is Marchant, since he's a trainee accountant. So even though the Companies Act does not requires the business to have financial statement compiled, however, he understands that if he requires a loan from the bank, banks might need audited financial statements. Further to that, they have decided, both the directors, which is John and Marchant, that they want to appoint Auto Inclusive as Vendy Boys auditors. So what is more important in this paragraph? Two things: that they will be compiling annual financial statements, and further to that, they will be audited. Right. So those are the most important things that are important for us to understand. And then we move down. We are told that brothers allocate some private expenses incurred by them, such as their personal vehicle fuel expense, as expenses to Vendy Boys. So now when we're looking at this thing, it could either be two things. It's ethical concern matter, or it could be an error. But we are told that they are trying not to complicate the tax situation. So that is the reason they're trying to allocate all expenses to Vendy Boys. But looking in this on a general business sense, it's meaning to say they are taking deduction under Section 11A, which they shouldn't be taking because it is not for business purpose but for private use. So that was important in this paragraph. And then if you move down, we are provided with the management accounts for the business. Obviously, it's Vendy Boys for 2 months ended 30 April 2024. And moreover, we are told that for this amount, they include VAT. Meaning to say, if you want the details excluding VAT, you have to take into account that you have to say this amount divided by times 100 over 115 in order to get that particular amount that you're looking for revenue excluding VAT. What is more important to look for first is that we look at the description and understand all the income and the expense of this business and digest what we believe we need to look at further. So for description, we have revenue, and revenue is broken down into cash and cards, which is similar to when it was operating as a private or as a sole proprietor. And then we have cost of sales. In this case, now the cost of sales is not broken down using the cost of sales formula, but it's just one amount. And then we have refunds. Then in the refunds, then we know what normal refunds relate to. It when it happens that the person made a purchase and there was no product that was released. If we're looking at the revenue and cost of sales, we have been provided note reference. For revenue, it's 3.1, 3.2, and 3.3, while for cost of sales, it's 3.4, 3.5, as well as Then when we're looking at gross profit, we have 3.6. So meaning to say in this note reference, we'll be told additional information that they believe we need to know with regard to revenue, cost of sales, as well as gross profit. If we move down, we then have expenses of the business. If we can look thorough in terms of what expense we have employee cost, and then it makes sense to have employee cost as probable for Jones as well as other employees they could have potentially employed as a result of this Vendy Boys establishment of business. We have maintenance of machine costs, which is expected for those business of this nature. There's a depreciation of vending machine, which is expected. They have 32 machine plus 3. And then rental payments for property owners. We have been told that then it makes sense that there is a chance that they need to pay rental for the OMV, previously location for OMV. There's a subscription for OP Connect platform. There's a vehicle fuel expenses, which is fuel, maintenance, and insurance. And then when we look at those three expenses now, what comes into our mind is that there's a potential in this amount, there is a private expense. And if there's a private expense, it means that we cannot claim VAT on the private expense because it was not as a result of furthering the enterprise. Then we have bank charges. There's a note reference for bank charges, and then there's a cash deposit, which is expected because if you make cash sales, then you want to deposit your cash. There's card fees as a result, obviously, using the bank. And then there's an interest of 16,011, which is expected because of the bank loan, as well as the loan from the funder, which is at 14.5%. Now that we see that we have note reference, we need to understand why they gave us this note reference. What do they really relate to? Now we need to look at this note reference and understand what they relate to. So 3.1, 3.2, and 3.3, those are not reference for revenue. Then we need to understand why we have them. So 3.1, we're told that the sales for 2 months. And then 3.2, the selling price, slow moving products are adjusted downwards. Obviously, we know that if the stock is moving slow, you rather reduce the price so that you can at least make the sales for that stock. And then 3.2, they've recently added the vapes as well as vape juice. And then soon they are planning to apply for the trading license for retail tobacco and e-cigarettes. Obviously, they want to increase the sales. And then in view of the recent media reports, allegation that the supplier sells counterfeit products, Merchant is actively exploring alternative suppliers. So what also we are seeing here is that the suppliers they're using, they also sell counterfeit product. So basically, counterfeit products are not the original products. Let's say, for example, they are buying ships and they realize, Guti, if the ships knickknacks they aren't produced by the original seller that we know, but they are produced by people that are manufacturing this product without license from the people that originally created knickknacks. So basically, the product that is not original, so counterfeited product. And then when you move down to 3.4, 3.4 and 3.5, it relates to cost of sales. Let's see what is important here. They're saying they're removing expiry date can extend the shelf life. Removing expiry dates can extend the shelf life of the product and reduce write-offs, right? So they are going to be using colorless nail polish to remove the expiry date. Looking at 3.4, this looks kind of dodgy and illegal that you're removing the expiry date. That is not allowed and is wrong. It's against the law. So now it's kind of concerning why these two brothers want to do something that is not right. And in 3.5, we are still looking at the cost of sales, additional information. So what they're telling us here is that they purchase from wholesaler, the inventory and the cost of sales or inventory rather It includes the purchases from wholesalers as well as the inventory purchase from OMV. Then 3.6 relate to the gross profit. That is from the management accounts above. Then let us see what are they saying. Vending boys occasionally experience thefts from vending machines at university or hostel, and in the long run, they want to focus on expanding into corporate environment. Vending business with the clients during audit engagement to identify possible future sites and uncover new opportunities. They have successfully pursued several audit clients to proceed with installation. So we all know that Marchant is a trainee accountant. So what is we are told here is that because now they are experiencing the theft in the university hostels, they want to rather expand their business in the clients that he is working on. And then we are told that seems like there is a success in trying to pursue the clients. Then 3.7 relate to employee cost. Then we want to understand what is happening, why we have employee cost. So the employee cost is as a result of the fact that they hired one part-time admin staff members to assist with the daily business administration. Moreover, they've hired two vending machine technicians who assist with the restocking and the repairing of machine. They are paid a fixed monthly salaries. That is why then we have employee cost. It's for the part-time admin staff as well as two technician. And then if you move to 3.8, 3.8 relates to maintenance of machines. And then we are told that the standard depreciation period of 10 years, and then 7 years, the machines that are older, they normally require a maintenance on a regular basis compared to the new machine. And then we look at 3.9. If we're looking at 3.9, it's related to rental payment to properties. And we're told that we are paying a fixed monthly rental, obviously for the 32 machines that we purchased or acquired from OMV. We're not paying for 3 that are coming from merchants, so proprietor, but we are paying for 32 machines that we purchased from OMV. Then if we move to 3.10, 3.10 relates to subscription to Op Connect platform. What is more important here is that first week of March 2024, in a software application called OptiConnect, that means we invested in this OptiConnect, which provides real-time monitoring and management capabilities, allowing vendor boys to remotely track inventory levels, machine performance, and sales data. So basically, this app will allow the two boys to monitor remotely with inventory setting, when they require maintenance, and how the sales is doing. Optimize restocking schedule, reduce overtime, improve overall operating efficiency. It has advanced analytical and reporting features, and they pay monthly subscription. So basically, that amount that we have there of 1,000 is because of the monthly subscription. So that means it's 500 per month because this is a 2 months. We have 2 months data. 3.11 relate to vehicle expense, and they are told vehicle expense relate to the panel van that is used by technician. Then 3.12, it relate to the bank charges. So what information are we getting about bank charges here? We mainly told about that Marchant was complaining about extremely high bank deposit fee, which is expected because if you're depositing cash, you expose the banks to high risk of holding cash. Therefore, cash deposit is expensive. And then what really merchants decided to do with regard to these high banking fees? Merchant agreed to assist his friends who has a small bakery business by including the cash from the bakery sales in vendor boys on a welcome basis. That will save the cash. That will save him on cash deposits. So he will account as soon as is about. So as soon as the cash is available to the account, then he will then deposit to the friend. what addition to that, or in exchange, vendor boys would buy inventory from one of the large wholesaler on the bakery's account, and then vendor boys would benefit from the volume discount, but paying to for it in cash. Vendor boys is not acting as an agent on behalf of his friend. Then the last part, which is not in the management account, it's 13 point, apologies, at 3.13 or 3.13. We are told that they have not insured the vending machine or the stock. That means if it is stolen, they will not be able to get any money from the insurer, either the machines or the stock. Then number 4, so this takes us to the last part of this paper, which is number 4. We are told further information relating to OP Connect application system, which is the system or the app they are paying subscription for. So what does this app does? So it manages sales, transactions, and inventory level. It has a wireless connectivity for vending machine by means of small device installed inside each machine. So this machine communicates with nearby cellular towers. So what data do we get? So the data that we receive includes the sales transaction, the inventory levels, and the machine healthy. There have been isolated instances that resulted in loss of connectivity of devices on the cellular network, but the third party provider is continuously working to reduce this. The app includes modules for sales transaction, inventory management, and machine healthy monitoring needs. So that basically the main focus of this app is looking at the healthy of the machines. It's looking at the inventory levels as well as the sales transaction. The device records case sales, transactions, and updates the sales data in real time. Marchant reconciles the case sales daily to the case sales data on the app. And obviously, it's banked every second day. The reason for reconciliation is to make sure that whatever the details that you have on the app agrees with what is received from the maintenance guys or the technicians. So this information wasn't important, but we'll then move to this last paragraph here. John uses inventory module within the app to monitor product level and short-term ordering of inventory. Marchant believes that the app is reliable and accurate. There is no need for regular inventory count. That's basically this one tells about that the ordering is done by John or is monitored by John. And then also Marchant does not believe there is a need to do inventory count because this app provides reliable and accurate data. So what's the data field that we can get from this app? Seems like we can get the information regarding to sales transaction data, inventory management data, machine health and operation efficiency metrics, alerts and notification, as well as cash collection. So this information is very important for us as well as the auditors. Then we're going to move to 5, which is basically additional information. There isn't nothing more important except what we will need when we're answering the question. So if you're looking here, we're told that is vendor boys only buys from registered vet vendor, and they keep accurate record of valid tax invoice on file. That is obviously in compliance with the Vet Act. They will always choose what is most beneficial for them in terms of tax or income tax. And then the legislation that they will use for tax purpose, it's the legislation of 2023-2024 financial year end. Any business that we have looked at here, which is either OMV as well as the vendor boys, which is new incorporation, it does not have any assessed loss or assessed capital loss brought forward from the previous year of assessment. And then because we are told that they have second-hand vending machine, it is important that we look at General Ruling 7 of the right of period of 5 years. So we are told that SARS allow 5 years as an allowance. Now let us look at the question. So most important, we need to remember this was January 2025, question 1, paper 1. It has two scenarios. It is, apologies, has one scenario and two required part. You are asked that you answer each required part. That means part one and part two in the separate answer book. That means you're going to have to use answer book one and answer book two. So you're going to answer in two answer book, which will be for part one as well as for part two. Let us look what is the question in part one. So part one has a total mark of 59%. Then, or 59 marks rather. So what you're asked in question one, you are asked to calculate Marchant's normal tax payable for 2024 year of assessment. We all remember that Marchant's has two streams of income. It's the income as a trainee, which is more like remuneration package, and then also is operating. He has a Marchant's business which runs 3 machines. Obviously, that we look at as a other revenue stream, right? As a result of operating 3 vending machines, which are sitting in university accommodations. So when you're calculating then the taxable income, you have to consider two income, that is income from vending machine as well as the income as a result of employment as a trainee in Hasley. Then what is important here is that you need to start with a gross profit of 48,095. That is if you're looking at the vending machine business. And then you need to provide a brief reason for the amounts that do not affect the taxable income calculation. So in instances where you believe that the taxable income will not be affected, you need to provide reason. You do not have to leave any amount and not include in your solution simply because you feel like it does not have any tax implication. You bring in the details of the amount and you state why it is not applicable for tax purpose. Then B, we are then asked to discuss from income tax and VAT perspective whether it would have been more advantageous for vendor boys to acquire the shares in OMV or to have purchased the asset of the business. You recall that Jackie gave us two options. The first option was that we acquire the shares, and the second one was that we go for the business. So now what we are asked here is that would it be more advantageous if we went for option one, which is the option we did not take? Then if you look at number C, it says discuss the income tax implication for vendor boys for each 2024 year of assessment in relation to the second-hand vending machine acquired in exchange for 100% equity shares in vendor boys issued to merchants. So you remember that what happened is that because Marchant was operating as a sole proprietor and had 3 machines, these 3 machines were transferred to vendor boys for the purpose of getting 100% equity shares, right? So now we need to discuss the income tax implication for vendor boys. What will the income tax implication then for those newly established business? There is 7 marks you get, and then for communication and clarity, do 1 that makes a total of 8. Then if you look at number D, which is the last question for part 1, calculate the VAT payable or refundable for March or April 2024 for vendor boys. You recall that we have been given the management accounts, which is inclusive of VAT, and that is where you're going to be calculating the VAT payable or refundable. You need to give a brief reason for the amounts that do not affect the VAT payable or refundable. The amounts that you believe, the amounts in the management accounts are inclusive of VAT. So that's what we were told in the management accounts above. Now that we are done with part 1, let us move at part 2 and see what is in part 2. Part 2 is 61 marks, and then it has 1, 2, 3, 4. It has 4 questions as well. So what we're going to be asked here, we need to discuss the business and financial risk of vendor boys as a result of purchase and operation of the asset from OMV. So two risks we're going to be looking at, what the business risk perspective, as well as what is the financial risk as a result of them acquiring the asset from OMV. There's a number of things that we have to look at. We have to look at the fact that we used the loan to acquire this asset. We have to take into account that these assets are old, they operate in 20 sites, as well as this are 32 machine. They are in location that we might not be familiar with. There are a number of things that obviously we have to look at, which we will cover when we're looking at the solution of this question. Then if you move to F, identify and discuss the risk of material misstatement at assertion level for 2024 financial year end, looking at inventory and property. So we'll be covering mainly the inventory. And for inventory, we'll be looking at existence, completeness, and valuation. So we know the inventory of business, it's basically your drinks, your snacks, and your vapes, as well as noodles. And when we're looking at the property, we're looking at actually the machine of the business. And then property, plant, and equipment, we are looking at the vehicle as well as the vending machine. And then you are only going to be covering the valuation on that side. Then number G, based on the data field available from OptiConnect app, describe how the audit team would use automated tools and techniques to obtain sufficient and appropriate evidence that Vendiboy's revenue is fully presented in the financial statements for 2024. So basically here, we're looking at the fair presentation of revenue using the app. So how the auditors are going to use the app in order to confirm that the revenue is fairly presented in the financial statements. We have been told that there are 5 things that we can gather from the app if we were to be interested to understand. And then in those 5 things, it is sales transaction data. We can get inventory management data, matching holding and operational efficiency metrics, alert and notification, as well as cash collection details. So then they can use sales transaction data in order to obtain any information that they need to gather the audit evidence. And that is 12 marks. And for critical thinking, you're going to have 1, which makes a total of 13. And then the last question of this is that we have to look at ethical concerns regarding how Vendiboy's business is operated by the 2 brothers. Then they're saying we need to exclude Companies Act and King 3, which makes sense why they'll say that, because now the companies doesn't even have to compile financial statement in terms of Companies Act. And then say Companies Act and King 3, we mustn't worry about it. And we know that King 3 is mainly for listed company and our company is small. But then that's not the reason they said we must exclude. We must exclude because the question says we must exclude. And then exclude any fundamental principles. We also do not have to even worry about it because the other brother is not in a training contract of a CASA. It's only Marchant that is. But also we don't have to exclude because of that. We have to exclude because the question asks us to exclude. And then this is 14 marks, 1 for professional skepticism, which is 15. So if you're looking at this one, it's one of the questions that are normally asked on APC level, which is the last board exam. So in this case, it seems like they want to introduce this question to the first board exam. So you're well prepared in terms of what will be coming in your last SAICA board exam, which is very interesting to see that SAICA is moving in this direction. Then what is more important here is that we have been provided the allowance tables, and let us see what we have. We have natural income tax rate for 1 March 2023 to 29 February 2024. And then we all know that the rates start from 18% to 45%. And on 0 to 237 100, it's 18%. And then anything that is above 1,817,000 and 1 cent, then it's sitting at 45%. Then the next part is on normal rebates under section 6.2, 6 paragraph 2. We all know that Marchant is less than 65, obviously less than 75, meaning to say the only rebates available to him for 2024 year of assessment at 17,235. We have been further told that he's part of the CA's medical aid scheme, and we are further told that he's not paying for dependent, also is not disabled. So the only allowance that is available for him is Section 6A, and the amount is 364 rand. And then moreover, we are told that he's using the car for both privates as well as a result of employment. And then we are told the value of the car that it is within 300. Apologies. It should be here. It should be within 200 to 300, because the value of the car is 269,900, meaning to say it falls here, not below. The allowance or the fixed cost allowance available to him is 806,958, and then for fuel cost 171.7, and the maintenance cost 60.4. And then when you look down, there is a simplified method also available of 464. So that is the important things that we have been provided in this paper that we will need in order to do the solutions. What I request from you on your side is that you follow me and then also follow the link or the video where I will be providing you solutions on this paper. The solutions for this paper will be on one video, which you will follow this video. Thank you so much for listening to this far. I really appreciate your attendance. And then can you please follow, subscribe, and share my YouTube channel to any other people that are doing SAICA SAICA first board exam as well as second board exam. I really appreciate that. Thank you so much and enjoy the rest of your day. Bye.